Hello and welcome to Your Stocks in the Mumbai studio. I'm Sonal Bhutra and this is a show where we answer all your stock-specific queries. And before we go across to our guests, let's quickly take a look at the markets as well. The Nifty right now up around 101 points, and that's a level which is off the highs of the day. 23,365 is where we are at, and for majority of the day today, we've been above the 24,000 mark. The mid caps too, they are outperforming, but they too have come off from the high. So 510 points higher on the mid caps. Bank Nifty is doing well, but it's underperforming the benchmark. So that index is up around 0.4%. A sizable recovery is what we've seen from the lows. We'll have to see whether that sustains or not. And a lot of action is being seen in the Nifty Bank. It crossed that 50,000 mark, but has come back from those levels. So let's move on and get stock specific now. Joining us today is Rajat Bose of rajatkbose.com and Sharad Avasthi, head PCG research of SMIFS, to answer all your queries. Gentlemen, good afternoon. Thank you so much for joining us today. And you know, queries keep coming in. There's so much interest in individual names, so it's best to get started ASAP. Sunil is writing to us from Mumbai. He holds 300 shares of Escorts Kubota at 1250 rupees since 3 years. He wants to know whether he can hold the stock for the long term or not. So he's made sizable gains as well on this particular name. Rajat, let me come to you first up. But chartically, how is this stock looking? We do talk about Escorts doing well during monsoons, the tractor sales increasing, but just from a short to medium term, what is this chart suggesting?
Its medium-term trend is up, short-term trend is up, long-term trend. You can even say that the long-term trend is about to turn upwards because this medium-term trend has begun from March at a much lower level, around say 2,600 or so. And now I would suggest the investor to continue to hold on and put a stop loss below 3,500, because although there had been sharp swings in the recent past, even then it did not fall below 3,500 mark. So that should be used as a stop loss. And instead of looking at a particular target, I would suggest one should carry on, because it's 9-day, 20-day, 50-day exponential moving averages are all moving upwards. Even 200-day moving average is also upsloping. So all trends are up. It should be held in the portfolio.
Okay, all right, should be held in the portfolio. Sharad, do you agree? You know, the management also sounded very positive on in a recent management meet. Do you think that that ties in with the fundamentals as well?
Yeah, long term, I do think that the fundamentals are very much in place. They are increasing the tractor capacity from around 1,70,000 to around 3 lakh units over the next 4 or 5 years by 2028. So that should be very positive. That is the major portion of the sales. Even the construction equipment business should do very well given the infra focus that we have in the country. Add to that the railway division, that should also continue to do well. And I think the Kubota impact should also give a leg up to the exports in the long term. But though I'm not very hopeful that at these valuations, so what is it trading at? It is trading at roughly 35, 38 times already 1 year forward. So I don't think there is much scope of re-rating happening there, unless and until there is a magic pill that comes in from the Kubota side, which I seriously doubt. So I think if you have a horizon of 1.5, 2 years, I think maybe it's fully valued at these valuations because forward growth is expected to be 10, 12%. But if you can extend the horizon to a 4 or 5 year kind of place where the localization of engines, etc., starts to play in the company and starts to show up in the numbers, add to that the Kubota export trigger that comes in if that does come in over a period of time. I think these two, three things and the capex that they are putting up, I think these 2, 3 things combined should at least take anything between 36 to 48 months. So if you extend your horizon to 3 to 4 years, you could continue to hold. But 1.5, 2 years, I think already trading at 35, 40 times forward does not leave much scope for upside on the stock.
Okay, all right. So that is about Escorts Kubota. The stock has done well this year. Last 3 months, a 45% gain on the stock itself. Going on to the next question, and this is for you, Sharad. Rakesh is writing to us from Thane. He holds 267 shares of Deepak Nitrite at 2,550 rupees a share since 3 years. He's a long-term investor and wants to know whether to hold or sell at current levels. Well, you know, Sharad, it is largely a commodity chemical company because the products that it makes goes through a lot of cyclicality. Do you suggest, Rakesh, to continue investment here or move to another company which has specialty products in the portfolio?
Last 3 years have been a bit stagnant for the company, but if you look at the capex plan that they have, I think it's a very aggressive capex plan that they have, roughly around 9,000 crores. And I think most of it should start showing up in the second half of this financial year. Some improvement on the agrochem side should also show up across the board for most agrochem companies, and Deepak should also benefit from it. Beyond this, the fluorination, the polycarbonate division, etc., the capex that they are doing in that 9,000 crore, roughly 1,800 to 2,000 crore every year. And gradually these capexes should start playing up in the numbers. So I think second half of this current year, we could see a lot of re-rating happening. Last 2-3 years have largely been no movement for these companies in terms of financial numbers as well as in terms of prices. But I think from the second half of this calendar, from this financial year, most probably improvements should start showing up. And the huge capex that they are doing up, they have already always done large sizable capexes and scaled them up to a certain level. So I think even this time they will be able to do it. So extend your horizon to around, you have been holding it for 3 years. I think hold it for another 2 to 3 years. You might see dips in between. But I think this is a good story to add on. The capex is huge. Consider the current balance sheet size is what, somewhere around 4,000, 5,000 crores. And you're talking about a capex of somewhere around 9,000 crores. So that's a decent amount of capex that they're doing. And it will still not have a lot of burden on the balance sheet in terms of debt, largely from internal accruals. So I think there is not much risk on this capex, and long term, I think growth would be very strong. Right now, what are we working with? 100, 105 rupee kind of earning maybe. But I think the second half of the year should see a lot of re-rating for this stock. So continue to hold, extend your horizon to another 24 to 36 months, and don't get perturbed by price movements. I think this is an excellent story to hold on for the long term.
Okay, all right, take that point. So that's about Deepak Nitrite. Sharad, this positive for a time frame of at least 2 to 2.5 years going forward. Moving on to the next one, and Rajat, this is for you from another Rajat Srivastava, who's writing to us from Tamil Nadu. He holds 4 shares of LIC at 530 rupees a share. He asks, when should he buy more shares? Well, LIC, there have been a lot of questions about it a lot of times. Of course, the gentleman is making decent profit, though the quantity is low. What do you suggest chart in terms of charts, medium to long term? How is the stock looking?
The life insurance companies as such, as a generic category, the stocks are moving up. LIC, in fact, is consolidating. It had a good run up to, say, 1160 a few months back. I think around February, it reached those levels. Now, one can definitely buy. You can buy on a dip, you can buy at current prices because it is range bound between, say, 1080 and 960. So currently around 1000. If one wants to buy for the medium to long term, one can buy at current levels and put a stop loss below 88.
Okay, all right, take that point. So that is on LIC. What about you, Sharad?
Yeah, I certainly think it should be one of your top bets to play on within the insurance space. Most of the private insurance companies are trading at 3.5 times kind of embedded value, and this is probably a stock which is still not trading at even 1.5 times. So I think even conservatively, after the listing, most probably the lacuna around the PSU culture would die down in LIC. And even the non-par products that they're working on, they are trying to aggravate that position. So profitability will take center stage. And it's a large behemoth. If you want to understand the perspective, the mutual fund assets of the whole industry are less than what LIC has as assets under its belt. So it's a large entity. I think the stock markets are doing well. So that portion of the investment pool should do very well. And I think if my view turns around right regarding interest rates over the next 6 to 9 months, that pool should also add to substantial profitability. So I think most numbers should improve. Even the monthly numbers coming out of LIC and insurance premiums are also very positive. So I'm very positive, even if it trades at 1.5 times kind of embedded value. We are working with a target of somewhere around 1350, 1400. So continue to hold. Even you can add at current prices, as Rajat rightly pointed out. This seems like an excellent long-term story to me.
Okay, all right. So positive outlook coming in on LIC. Moving on to the next question. K. Sambasiva Rao is writing to us from Madhya Pradesh. He holds 100 shares of Reliance Power at 30 rupees a share. He is a long-term investor and wants to know whether to hold or sell at current levels. Sharad, I have to come to you on this one. Too much volatility, too much news flow flowing around. What do you suggest here?
It has got a resistance around 34, 35, and it has got a support around 24. So if it were to fall again below 24, then you better exit because the 200-day exponential moving average is at 24 only. And if it were to cross 35, then you can project further upside. But let it first cross that, because most of the time when it comes close to that level, it faces selling pressure and comes down. So it's a range bound counter. Don't buy fresh. Only when there is a breakout or it comes to test the pre-support level, then you can buy. In between, after say 5 sessions, including today's, the way it is moving up, you should not be chasing this kind of account.
Okay, do you agree? Oh, yes, absolutely. Sharad, what's your view here?
Largely on most of these smaller names, I think there's a lot of, the WhatsApp, Facebook community that seems to come up and recommend stocks, and a lot of retail investors are getting plugged into these stories. But I think there's a lot of, we are trying to justify value at these numbers, but I think these are all long-term stories. The best thing that retail investors can do is avoid them rather than try to get a quick buck out of these stories. And I don't think anyone has a complete story as to what is going to happen or what turnaround is going to happen, what timeline it will take. But I think it's good for punters or people who just want to punt on it. But as investors, I think these are ideas that are best avoided.
Okay, all right. So not the best choice is what Sharad is suggesting here. That's Reliance Power, though the stock is higher by 10%. But as they've been pointing out, there has been a lot of volatility in the stock all the time. Let's take a quick break. When we come back, we'll answer more stock queries on the other side. So stay tuned for that. Welcome back. You're still tuned into your stocks. Quickly, let's take a look at the markets because there's some more selling pressure that we're seeing from the top. 88 points from the high is gone. The Nifty is up around 88 points right now, and it is at that 23,352 mark. So we'll watch out for whether it breaks that 23,350 mark or not. And that has also come on the back of a lot of these stocks which have come off from the highs as well. So something like a TCS, it is come off this particular hour. NTPC is lower. Wipro. So IT stocks are the ones which are putting some pressure as well on the Nifty right now. Infosys, for instance, as well is at the day's low. So this is one pocket which is not doing so well. We have Kotak Mahindra Bank as well, which has come off from the highs of the day. But majorly, it's the IT names which are putting pressure on the Nifty right now as we speak. So watch out for that one, because this is one pocket which has come in for some profit taking again, and that has been the case. The IT stocks, they have been under pressure for last two trading sessions on the back of some profit booking. But let's go back to viewer queries now. We still have with us Sharad Avasthi and Rajat Bose to answer all your stock queries. Gentlemen, thank you so much for waiting by patiently. S. Kumar writes to us from Krishnagiri. He holds 1,000 shares of MMTC bought at 70 rupees per share and 1,000 shares of Railtel at 380 rupees per share. He wants to know the future prospects of his investments. Sharad, let me come to you. Big quantity, has been holding it for quite a bit. What do you suggest?
MMTC, I'm not particularly sure. I mean, I find it hard to value the company, and I don't know why the market is so optimistic occasionally about this stock. So MMTC, I think it's best you don't go with my advice. But if you want to follow my advice, I don't like the stock at these valuations, and I fail to justify any number for that valuation. Compared to that, maybe an MSTC looks much better. But then that's a different story. So MMTC, I don't think you should continue to hold. Railtel, I think they have a lot of ROF for most of the projects that they have. And because of the railway projects that they do and a lot of new projects they are doing on the data center side also in partnership with other players, I think it could be a surprise for the long term. The only problem could be that valuations maybe are factoring in largely most of the positives that you can see on Railtel. So Railtel is a good idea long term, but again, a similar story where maybe the next 18 to 24 months may be very well discounted for the stock. For FY26, we are looking at an earnings of somewhere around 12-13 rupees. It's already trading at 400 rupees. It's a debt-free company. I think the data center business is a surprise package that could add if they can also scale up some of the business that they're doing with railway and some of the defense guys. I think that could scale up some bit. But considering this 19-20% kind of growth rate that we are looking at, I think it's roughly fairly valued at these valuations. I don't see much upside happening over the next 18 to 24 months.
Okay, all right. So that is your view about Railtel and MMTC. Rajat, your view on these two stocks?
Well, MMTC has been clocking very good volume today. I mean, I think 18 million shares already done. What I have seen is that in the month of January, whenever there had been volumes above 15 million, January there was a rise from about 60 or 55 level to about 101. And now MMTC is about to post a breakout. That breakout will happen when it crosses 80 and closes there. This is giving a buy signal because the moving averages are suggesting that it's going to go up. And the volumes are also very encouraging. So one can add more if he is already invested, or if he's not, then one can buy with a stop below 65. Regarding Railtel, similar kind of range-bound scenario, but Railtel is also a buy, but it will see good upswing only when it takes out 450. Currently, it is in a consolidation mode because it also failed on the day the election results came in, and now it is actually on a catching up mode. So once 450 is taken out, you will see fresh bullish signal in Railtel.
Okay, all right. So this is the take on Railtel and MMTC. Moving on to the next question, Sonam Shukla writes to us from Chennai. She holds 3 shares of Paytm at 500 rupees a share. Wants to know whether to book her losses or stay invested. Sharad, let me come to you because it's a small loss right now. The quantity is just 3. Do you think it's a good time to exit?
No, I think most of the negatives most probably are factored in after the recent hiccup that they have seen. Most probably from here on, largely most of the regulatory environment should also turn out to be better for them. And I think they will also readjust and recalibrate according to the regulatory requirements better in comparison to earlier. And whatever 20-30% kind of knock had to be taken off because of that business being on the back burner for some time, I think most of the price correction has happened. From here on, I think over the next 1.5-2 years, you could largely expect some improvement or the other continuously clocking in for Paytm. And at these valuations, if you look at EV to sales, I think largely most of the negative news is priced in. And as the positive numbers flow in over the next 1.5-2 years, you could expect some strong re-rating. Difficult to quantify how much of a re-rating. I think the positive side could be that in case, they turn around, they come back with the lending business also with some plan or the other. Part of it they have done with tie-ups with various banks, but I think they will also pull up the socks in terms of the regulatory compliance, and they should be a better company from here on. So I think it's a good company. You can continue to stay invested in this. I think most of the negative is already priced in. So at least 20-25% kind of appreciation you can expect, but the re-rating could even be smarter than that.
Okay, all right. We get that point. By the way, there's a sharp spike on Paytm as we speak. The stock is up around 5.5%. So yes, that's what's happening with that stock right now. Let's go across to the next query. Ravi Ratana is writing to us from Tamil Nadu, holds 13,000 shares of Jaiprakash Associates, purchased at 14.84 rupees a share, wants to know the future prospects of the stock. Rajat, let me come to you on this one because the viewer is making a loss here. And this is a stock again which sees a lot of volatility. What do you suggest?
The investor from our city, mine and Sharad's, because Calcuttans have a penchant for this stock, and every time they think that he's going to give them a bounty or something, I simply don't understand why people get into stocks of this kind. This is not. This was hitting circuits. Probably it is on an upper circuit today. But these stocks, I'm there in the market since 1991. it was always a speculator stock, Fatkariya stock, you can say. And hardly people ever make money. Investors, traders can make money. If he's a trader and betting on it, fine. If it crosses 16, then it will cross the 200-day moving average. Otherwise, there is no point getting into a stuff like this.
Okay, so so your take is, of course, that you don't understand why people go ahead and invest in stocks like this. Sharad, I think you have the same idea about this.
Yeah, largely the same idea. I don't know in the past whatever they have done, but once a company goes into NCLT, why do you want to bet against it? I have seen people do it with Global Trust Bank, hoping that it will come back. I think they don't understand that when your assets are totally wiped off, you go into NCLT. So equity holders will be the last one to get anything. But again, that WhatsApp, Facebook University, and everyone thinks a low-valued stock can get you a lot of money. I still cannot understand that logic, but then that's how people behave. Some people might think like that. But again, I don't think you should be betting into these stories as good long-term investments.
Absolutely, take that point. Let's go across to the next query. Balaji writes to us from Tamil Nadu, holds 150 shares of Eveready, bought at 355 rupees a share. Wants to know whether to book her losses or exit at current levels. I think this is a company from your city, Rajat. What's your take here?
Eveready Industries, right?
Yes, that's right.
It actually fell to a low below 300 on that fateful day, 4th of July, I think. And now it has come quite a bit, very close to its 200 exponential moving average, which is currently around, say, 343. If it manages to get past that level, then only I would say one should consider buying. Otherwise, why I'm telling you that it should actually give you a clear indication that 200-day exponential moving average is taken out decisively, because every time it tried to cross this, it failed, and whenever it did not sustain above that for a month. So I don't think one should be getting into it. But if you get a bargain price like 300 some days back, people got it, then fine. Personally, I would not advocate buying it.
Okay, all right. So you would not advocate buying Eveready as well. Let's move on to the next query. Sakshi Taneja writes to us from Patna with an investment query. She says she wants to invest in defense stocks and asks if Bharat Dynamics is a good stock to invest in. Sharad, what do you suggest? Defense definitely has been the flavor. Do you suggest at these levels it's still a good buy, because we've seen stellar rally across the board?
Yeah, that is the problem, that most probably most of the defense stocks may have run far ahead of the fundamentals over the next, 24 months. Largely, I think it's a story that will play out over the next 3.5 years. But whether the frontline names like a BDL, BEL are the best stories to bet on them, I seriously doubt that. I think what is it trading at? Maybe forward, it is trading at 40, 45 times now. And 2 years, most probably the earnings will escalate from around 15, 16 right now to around $30. But even then, if you look at it, it's trading at 1400. So I think it's very expensive valuations. Though the story is very much intact, as more of the business comes in, the export channels open up, there could be a lot of opportunities for these companies. But at 40, 45 times, I think most of the upside is largely capped in, because right now the expectation is around 20 to 15 to 20% kind of growth, maybe 20 to 25%. So based on that, when you're trading at 40, 45 times, yes, the IP thing, etc., is important, that there is a lot of more newcomers cannot enter into it. But I think if I consider the type of growth, largely most of it seems to be factored in the price. Maybe you could look at something like an Idea Forge, where the valuations are still not very attractive there, but they have a lot of capex in place, and it's not done much. And once it has corrected substantially, so I think that's an idea you could look at. The drone business is expected to become around 3 to 4-fold over the next 5-7 years. So
Okay.
from 4 billion, it will go to 20 billion. So that could be a good idea you could look at.
Okay, all right, gentlemen, thank you so much for joining us today and patiently answering all those queries. With that, we'll take your leave on this edition of Your Stocks. But do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.